afternoon, everyone, and thank you for attending the Vracusbaum Computer Consulting Monthly Webinar Series, today featuring Avalara, presenting Nexus 101. My name is Kelly Bergman, and I'd like to quickly just address a few housekeeping items before I hand the floor over to our presenter. All attendees are in listen-only mode. As we go along, you can type questions into the Q&A section at the bottom of your menu bar. We will try to answer all the questions at the end of the webinar. This is being recorded, and we will post this on our website within the next couple of days or two, and our YouTube channel. Now, it is my pleasure to introduce Parker Wilson, Sales Exec for Avalara. He requires no introduction, and I know you'll get all of your tax compliance questions answered during this webinar. Parker, the floor is yours.
Fantastic. Thanks, Kelly. Appreciate you having us. Go to the next slide here. So briefly about myself, my name is Parker Wilson with Avalara. Been with the company for, gosh, it'll be 8 years. It'll actually be 9 in February of next year. So have a lot of knowledge in the sales tax space, a lot of tribal knowledge that's been built up over the years. So happy to kind of share that with you today. And so what we're going to be talking about are just some overviews and some changes that have been happening, right? Unfortunately, it's ever changing. Also some challenges that businesses face, and then what you guys can do or what the best path to compliance can be. And so we'll share a couple of those, and any questions we'll also definitely address those at the end, like Kelly mentioned. So the sales tax landscape is complex and changing all the time. Back in July of 2018, the Supreme Court ruled in favor of South Dakota to uphold economic nexus thresholds. Unfortunately, each state is a little bit different in the thresholds that they have. And they also have different notice and reporting provisions, and the rules are always in flux. So it's difficult to keep up with these, and we understand as a business, there's a lot you have to think about. And so managing sales tax compliance can be one less thing that potentially we can help you automate. One little tidbit too that I like to add in as far as complexity, in Florida, janitorial services to clean the inside of windows are taxable, while the commercial services to clean the outside of the windows is non-taxable. And then in New York, a sliced bagel is taxable, while the whole bagel is not taxable, right? So just to go to show kind of how complex some of these rules and laws are, and keeping up with them can absolutely be a pain. So compliance is not optional, right? So increasing pressure as far as managing the complexity exposes business to increased risk, and states will capitalize on this risk. So what that means for you is you have to have proof of compliance, basically outlining exemption certificates, right? A lot of the Sage folks that we work with and talk to, they come to us and say, well, hey, Parker, we don't really have to deal with charging sales tax. And we understand that. You have to manage the collection and maintaining of those exemption certificates, proving to these states or jurisdictions why you did not charge tax. So what we found is this is actually low-hanging fruit for auditors. And so once they get a whiff of you being out of compliance, they're going to sink their teeth in and continue to reach out and continue to work with you to potentially drive more revenue for the state. And so back taxes are just a portion of the overall cost, right? We're also looking at penalties, interest, time in preparing the audit and details, as well as supporting all of that and the time that it takes for you to do that. So doing it right up front is going to be paramount to managing and keeping up with this. So even companies who want to comply, they can also find it difficult and to varying some degrees as far as costly, right? And so a quick story we like to share is Mattress World. They were a company based in Oregon. They got caught up in a kind of a wacky tax nuance when the use of a third-party delivery service actually created Nexus for them in Washington. They were actually driving across the state lines, and because they discovered this nuance too late, Mattress World actually ended up owing the state of Washington $1.7 million in 2012, and it was too much of a debt to bear, and it actually ended up causing them to close 7 stores and put 80 people on the unemployment line. So why now, right? What we found is that and this is based on the state revenue officials. The vast majority of states in the U.S. are at a total budget deficit of almost $55 billion, right? That's billion with a B. Potential tax and budget cuts by the federal government may only exacerbate this problem. So what we found too is the Rockefeller Institute did a 46 state evaluation of state income and sales tax revenues, and found that states are lowering their tax revenue forecast. And they actually did this in 2017 and 2018. So sales tax on average makes up nearly 50% of state tax revenues, and they are losing $13 billion from uncollected tax on e-commerce sales. So they're finding ways in any way they possibly can to drive revenue. And what we're finding is they're hiring more auditors. They're basically going out to the larger company and finding the smaller one that's not charging them tax, and potentially going after them. So as a result, states are going for the easy money, right? They're increasing the audits and enforcing activity on businesses with an emphasis on uncollected e-commerce sales tax. So not only are they looking at the exempt sales, but they're also looking and emphasizing on uncollected e-commerce sales tax. So the risk potentially there is if you are doing e-commerce sales, is doing it right. So most of our customers decide to take action because an opportunity has emerged, a trigger that makes the timing for them right now, right? It's not when is the timing right, it's the timing is now. And so finance teams want to focus their energies on helping the company succeed. They want to manage finances proactively and strategically. And so what we're seeing is that's why they're already using a third-party payroll service. So why not use a third-party company to help manage another non-revenue generating activity, which is sales tax? So what we see too is a lot of companies are really focused on economic nexus, whereas this is kind of the new shiny object, if you will. But what I want to reiterate today is there's other ways to create nexus, and that is by definition what they're calling physical presence nexus creating activities, and you'll see them here on the screen. So trade shows, doing drop shipments, even hosting data centers can be nexus triggers where this supersedes, economic nexus. And what that means, and what I'm getting at is, economic nexus should not be the only thing that's on your radar and trying to understand where you have obligations. It's also going to be the physical presence creating activities. So if you have a sales team or a sales staff that travels, those potentially can be nexus triggers. And when we get here towards the end, we have a service to potentially assist with uncovering your nexus obligations. And I'll get to that here towards the end. So economic nexus threshold, right? I just mentioned that previously. What is economic nexus, right? It is the tax collection obligation imposed on sellers based on their level of economic activity within a state. So unlike physical presence, it's based entirely on sales revenue, transaction volume, or potentially both. So like most sales tax laws, economic nexus criteria vary based on state, unfortunately. All aim to level the playing field between non-collecting out-of-state sellers and brick and mortar businesses. What we've seen is now, I know Missouri and Florida are grayed out, and the other grayed out states don't charge sales tax. So Alaska, Oregon, Montana, New Hampshire, We call them the nomad states. Can't forget Delaware. It's the small one there. Those are the nomad states, and they don't charge sales tax. So Missouri and Florida, they actually just recently put thresholds in place, and Missouri was actually the last one to come about as having an economic nexus threshold. It took a while to get passed through their Senate and House, but now they also have out-of-state seller requirements, also known as economic thresholds, as well as they put in place marketplace sellers statutes. Some common triggers of creating economic nexus is what you're seeing here on the screen, right? Their expansion into more states, e-commerce growth, and so what you guys do, we know it's hard, right? So 69% of your peers said understanding sales and use tax was one of the hardest. Nearly half of the tax pros said that they would not be right in an audit, and so now is the time to potentially automate and outsource, right? This is kind of going back to one of the things that I mentioned earlier on is, but most of my sales are exempt, right? So do I even have a problem? And so we know that many of the audience here potentially are manufacturers. So examples of how economic nexus potentially affects manufacturers is most of these states are also looking at gross sales in their economic nexus thresholds. So remember that all sales potentially can count towards this threshold. And unfortunately, each state is a little bit different. But for the most part, we are seeing that almost all states, and I don't want to put the all in there, but majority of the states are looking at gross sales. So even if you are selling exempt or for resale, those potentially can still go towards the trigger of economic nexus. So continuing on the same tune here with manufacturers or exempt sales, what I have here are two different examples. I have a manufacturer in New York whose sales are made to other OEMs or reseller dealers that had their burden to prove exempt sales increase, right? So they had less than 75 exemption certificates on file prior to Wayfair, but now they need to have more than 1,000. And that's because the Wayfair increased their Nexus obligations, and now they have to collect exemption certificates outside of their home state of New York. So I also have a national wholesaler who relies on drop shipping, and they grew their Nexus footprint exponentially. Though they were previously compliant with 500 exemption certificates on file, they now need to manage more than 5,000 exemption certificates to remain compliant. So at Avalara, we see the impact of the Wayfair ruling every day. The impact to companies' compliance obligations isn't slight, it's exponential. So every day we see firms who, previous to Wayfair, had Nexus in, let's say, just 3 states in which they had physical presence. Wayfair represents a completely new set of rules, and it moves the goalpost. So now, instead of Nexus in 3 states, the typical company now has Nexus in 20 to 25. Same for exemption certificates, right? Now they have to collect them in much more states. And the real question here is, can you process handling all of this new compliance burden, right? And so we're here, we have tools and automation to help manage and create efficiencies around keeping this in-house and not having to really deal with the complete burden and getting it off of your finance and accounting team's plate. So around exemption certificates, I know we were just harping on that. Just wanted to talk quickly around the forms. So we know not only is it a burden to know, hey, who do I need to collect an exemption certificate from, but also we know that here are just a couple of examples of the exemption certificate. And so you'll notice they look quite different. These can vary from state to state and for different purposes, which gets confusing for businesses with multi-state operations. So, excuse me, so how do you know when and which one to collect? Not only does the right one need to be collected, but it must be filled out correctly as well. So you might get mixed up with resale certificates or direct pay permits or manufacturing exemptions, agricultural cards. And so just know that we have a tool to manage the entire process from collection, maintaining, validating, automating the entire process around the life cycle of the proper exemption certificate. So next would be the need to file the sales tax returns in these additional states. So managing your filing calendar, the e-file and the payment process, filing deadlines, ensuring that you're filing in potentially the county or city, and even outlet reporting. Also local filing in home rule states like Colorado or Alabama. We understand this can be extremely complex. So this is one of the additional outsourcing or automation tools that we provide is our managed return service. So integrating directly to your ERP system or your shopping cart, pull the data right out, provide a detailed outlined return that we can then file for you. We also handle any notices as well as guarantee to file on time with that service. So if that is something you're interested in, make sure you reach out to your Veracruz rep, and they'll get you in contact with the right folks over here at Avalara. So I know the conversation has been around automation. So want to make sure that we talk briefly around how automation does reduce kind of these repetitive tasks and takes advantage of the trends and information from the sales tax department data, right? We have all of that detail kind of compounded and inputted into our system. So we're keeping up always with the rules, the rates, the boundary information as they're ever changing. It's all built into our solution. And so it's something that you would never have to worry about again. So next here is just kind of this this half pinwheel of just some of the offerings that Avalara provides. Just kind of shows that we can kind of handle all of the sales tax compliance efforts and maybe some things that you might not have known that we already provide. So we actually have not only the ability to help calculate the proper sales tax, file the proper sales tax returns, collect and maintain those exemption certificates, handle sales tax registrations, do the entire treasury and payment to the states. We also have a newer tool that is called Avalara. They're working on the name, but it's basically our research tool. So we purchased a company called TTR, Transactional Tax Resources. And now on the back end of the Avalara system, not only do we keep up with the rules, rates, the boundary information, we also have what I like to call a sales tax Google. So it provides you with any details or questions you have around maybe drop shipping, taxability of your product, when and where you should be charging sales tax based on some of those drop shipping questions. So it's a great tool, and it's definitely something we can provide more details around if interested. So I'd be remiss if I did not mention our partnership or a program that's actually outside of Avalara called the Streamlined Sales Tax, or SST, as you may have heard. So what the SST is a conglomerate of 24 states that have come together to unify and streamline some of the rules and challenges that brings into sales tax. And so as you can see here, all of the states that are highlighted white, with the exception of California. I'm not sure why there's a little white box around California. It is not part of the SST states. All of the other white states here are part of the Streamlined Sales Tax. And so basically what this means for you is Avalara can perform your registrations, your calculations, and your filings for free, right? The F word that us sales folks hate to use, but it's true. It is a free service that Avalara can provide as long as you meet or qualify as a voluntary seller. So as you see here on the bottom right-hand corner, you would need no fixed place of business for more than 30 days in the state, less than $50,000 of property and or payroll, or for some of the smaller businesses, less than 25% of total property or payroll in a member state. So as an example, let's say you're located in North Carolina, but you do business outside of North Carolina and potentially have Nexus in a lot of other states. You would not be a voluntary seller in North Carolina, so there would be a cost associated to the calculations and the filings, but you could still take advantage of Avalara doing registrations, calculations, and filings in some of these additional member states. So wanted you to keep that in mind, and happy to talk through that in more detail as your specific requirements or your specific scenarios. So wanted to show this briefly. We have a lot of detail and information and some great resources. So getting together with your Veracruz rep and letting them know that you are interested in Avalara. We have some great services and offerings that we can definitely chat through. Generally, the best way is to kind of have a deeper dive into your current business strategies, initiatives, and learning a little bit more about potentially how Avalara can help. So that's definitely something we can provide. What we also see is on the front end, understanding your Nexus is the most important part. And so we have a couple different ways you can do that. We have our basic assessment, which is actually free on our website. You can go along and fill out today. But what most folks generally find the most value in is our full or premium assessment, where we're taking either the last 12 months of business activity with the full, or with the premium, we're going all the way back to when you first created Nexus. We're understanding what generated or triggered that Nexus obligation, giving you a detailed report outlining where you have that obligation, and then working on a best path forward. And then also, we always suggest you leverage your local sales and local tax expert, but we also have that service here internally. So don't forget about us, but also don't forget about your local SALT expert. So the path to compliance generally follows kind of this model, where we see the sales tax risk assessment, or you can even do your in-house research and find out where you have Nexus. Then it comes with the software purchase and implementation with a level 3 connector, which would be Sage 100, see about 104 days. If you have any back tax liability, we would highly suggest leveraging our program, which is called a voluntary disclosure agreement. Generally, we see that takes about 4 months to complete, but we can start charging sales tax once you're in the registration process. So generally about 3 to 4 weeks. So that way there's no lapse in compliance, as well as no lapse in collecting sales tax and building that risk higher and higher. So we see that this is kind of a good model and helps kind of give a good picture as to what the path to compliance potentially can be. All right, I know that was probably a lot of information. Hopefully it was very helpful. Any questions out there, Kelly, that you saw? I have a couple here that we generally get that I can talk through as well.
Yeah, I don't see any questions. You did a great job, Parker.
Awesome. Well, don't be shy. If you have some questions, please put them in. Happy to kind of chat through what some of our normal questions are. Oh, we have one.
We have one. How does Avalara integrate with Sage 100?
So we integrate directly into your Sage 100 platform, taking over your native tax functionality. So where you would go in and change your customer card or customer record and put in a tax item, that will now be taken over and overridden with AvaTax. And so now when you go to create an order or an invoice, it's automatically going to reach out to our cloud, grab the correct sales tax based on a couple different options or items. Looking at the first, do you have Nexus? If the answer is no, obviously, then no tax will be applied. If the answer is yes, then it's going to look at, is the customer taxable? Are they marked as exempt? Or is there an exemption certificate on file? Then third, it's going to look at, is the product taxable? And then apply the proper sales tax based on the address. So pulling in state, city, county, any special, local, stadium, or transit taxes that may apply. If you are interested, we certainly can chat in a little bit more detail. But something also to mention is Sage actually resells our product, right? They think so highly of Avalara that they white label it, and it's actually called Sage Sales Tax. So not to be confused with the Streamlined Sales Tax, SST, but it is also called SST, Sage Sales Tax.
So just to clarify, you use Avalara's tax codes, right? Not the tax codes through Sage?
Correct. Yeah, we're going to be taking that. They'll no longer be managing and updating the sales tax rates or sales tax items in Sage. It's all now going to be done through the Avalara integration and based on the setup of the Avalara platform.
Do you use Sage sales tax classes?
No.
Okay. And this client says she does a lot of repair, and for repair services, it is taxable in our local parish rather than the customer shipped to jurisdiction.
Right. Yeah, so we know the taxability of repairs across the US, and we'll apply the proper sales tax based on either where it's being done, right? So wherever the repair is being done, and or based on the ship to location. So if the repair is being done in your shop, generally that's going to be where the sales tax needs to be applied. So it's going to take into consideration the actual location where the repair is being done, not necessarily where it's being shipped back to. And we can certainly have a deeper conversation. Happy to do that. We also work with a lot of companies that do repairs, as well as travel to perform repairs on site. Potentially Nexus triggers, something to think about and look out for.
Are there any fields added to Sage?
No, there'll be no additional fields added to Sage. We're just taking over the sales tax item field.
Great questions. All right, I think I'm good on my end for now.
Perfect. One that we generally see a lot is, what states have you seen that are being more aggressive in going after businesses? While I don't necessarily know which states are being more aggressive, I do know which states have higher penalty rates, and those are generally the ones where, depending on any potential liability that you've seen or that you have, those are generally the ones you want to take a look at first. And we are seeing states like California and Colorado hire more auditors, and are becoming more aggressive at finding out who is not charging sales tax on their e-commerce websites. So those are definitely something to look at. Another question we get a lot is, are shipping charges taxed? Unfortunately, the question is, or the answer is, it depends on the state. And so again, based on us integrating into your platform, we take over and we know the taxability based on the item, and know the taxability from state to state for shipping charges or freight.
All right. How are you taking over ST item fields?
So I don't think this is the point in time where we should be discussing this. If you want to discuss this in more detail, I would suggest we set up a call and we can certainly walk through kind of how we're taking that over. It's something where it's a much more detailed conversation than me just answering the question via a webinar.